issues around what I see as two viable choices for an independent Scotland. The first being the use of the UK pound within an informal currency union. The second being a new Scottish pound, a new currency whose value would be market determined. There are other options that have been discussed at various points. The formal currency union effectively died with the 2014 referendum and the refusal of the UK government to countenance such an agreement. The euro, as I see it, is not an option in the short term, even if the Scottish government was to make it a policy priority. And a fixed currency, a fixed Scottish pound, presumably against the UK pound, would not be viable without very large foreign currency reserves, which an independent Scotland would not have, certainly from the start. So within those two currency options, I want to look at the latest Scottish government proposals, obviously now the former government proposals, which is the adoption of a Scottish pound, quote, as soon as practicable after independence. But until it's adopted, the use of the UK pound within an informal currency union. The proposal that the Scottish government came up with has requirements and criteria for adoption of the Scottish pound. To me, they read basically like Gordon Brown's old tests for joining the euro, where the outcome of the test is predetermined. Some of the requirements have already been met. Others would need to be in place on independence. Most importantly, Scotland at independence would need credible economic institutions and would need a clear plan for the transition, which has effectively already been announced, to a new currency, or would have already been announced to a new currency. Without those credible institutions, without that credible plan, Scotland would not be able to, or the Scottish government would not be able to borrow, except at best in a very limited and short-term fashion. And as with virtually any country, without an ability to borrow a reasonable cost and for longer maturities, an independent Scotland could not be successful. That is a criteria for any independent country. So, as I see it, the advantages of delaying the adoption of the Scottish pound really boil down to two. One is to provide more time for the new Scottish government to prepare for the adoption of the new currency. And the second is to allow time for a record to be established of responsible economic governance. We shouldn't underestimate the value of more time to prepare. Independence, all told, will be an enormously complicated policy to carry out. However, the reputational issue, I think, should not be overestimated. As we've seen with the recent Truss government, reputation can easily be undermined, and it's really about what investors expect a current government to do rather than what many past governments have done. And perhaps most importantly, the stated aim of rejoining the EU requires an independent Scottish government to meet a set of economic criteria, and these could easily be developed into a framework that the Scottish government commits itself to adopt, to meet. And the strength of pro-EU feeling in Scotland and the centrality of rejoining the EU to the independent Scottish case means that such a framework would have high credibility. So for me, the proposals as they stand do not make any strong case for delaying the introduction of a new currency. And most importantly, the proposals do not take sufficient account of how changes in central banking in the UK and globally have increased the disadvantages of informal currency union. And we should emphasize that informal currency union already is a very rare option for countries to adopt. It's the option of countries like Montenegro, Ecuador, Panama, some other small island states, but it is not a common choice that countries make. A formal currency union of this type that was proposed in 2014, formal currency union with the rest of the UK, would mean that Scotland would continue to use the UK pound, but it would use it subject to a formal agreement between Holyrood and Westminster as to the terms of that use. Now, those terms would have to be negotiated after a referendum, a positive referendum result for the yes side, but would include the Bank of England having responsibility for monetary policy and responsibility for financial stability in Scotland. An informal currency union, in contrast, means that there is no formal agreement under which Scotland continues to use the UK pound, and the Bank of England would have no formal responsibility for monetary policy and financial stability in Scotland. And the crucial point here is that the ability to carry out monetary policy and financial stability responsibilities to the fullest extent ultimately depends on the ability of a central bank to create its own currency in unlimited amounts. And in an informal currency union, a Scottish central bank cannot create UK pounds. So it cannot make up for the gap that is left by the lack of responsibility of the Bank of England for monetary policy and financial stability in Scotland. And we have seen in recent years multiple instances in which both the full range of monetary policy and financial stability responsibilities have required the central bank to be able to create unlimited amounts of the domestic currency. We saw it in the financial crisis in 2008-9. We saw it with quantitative easing, the creation of money to buy government bonds in the hope of increasing economic activity and reversing what was then very low rates of inflation. We saw it in the needed response to financial crisis at the beginning of the COVID-19 pandemic in March 2020, and we saw it once again in September 22 with the financial market panic caused by the Truss government. And as a result, an informal currency union with the rest of the UK, as a result, the Scottish Central Bank unable to create currency to meet monetary policy and the full range of monetary policy and financial stability responsibilities, essentially involves the Scottish government and the Scottish economy as a whole taking a substantial risk. And that risk is either that no sort of crisis occurs that needs the full range of monetary policy or financial stability actions by the central bank, or that the Bank of England deems it in the interest of the rest of the UK that the Bank of England comes in to support the Scottish economy, monetary policy, or financial stability. And there can be no guarantee that either of those situations occurs, that there is no problems of either low inflation or financial crisis, or that the Bank of England makes that decision. And therefore, the small potential advantages of delaying the introduction of the Scottish pound do not justify taking the risks inherent in an informal currency union.